Hello, this is Professor Randy Menton, and today I want to do the final component of exercise 3.27. Now, exercise 3.27 actually doesn't ask for this component, nor did it ask for the second component that I did. It only asks for us to go through and go from an unadjusted trial balance to an adjusted trial balance to make all of the entries necessary to get from point A to point B. Well, what I did is I just expanded on 3.27 and have included an income statement, a balance sheet, and a post-closing trial balance over here, and that was done in section 2 of 3.27's lecture. And now what I want to do is go through and actually close out the accounting records and make all of the entries to eliminate the temporary or nominal accounts in the process. Now, let me start by saying that if you will notice here, we had $75,300 over here on the credit side of retained earnings. When we get to the post-closing trial balance, the amount is actually $116,500. Well, how did I get from point A to point B? Well, that was accomplished through the closing entries. So what I want to do now is show you how we went through those closing entries, or how we would go through, I should say, those closing entries to get to that point. So the first thing that you have to remember is that there are 4 closing entries. The first one is to close revenue. The second one is to close expenses. The third one is to close the income summary account. And the fourth is to close the dividends account. Now, all of those that we talked about, revenue, expenses, income summary, and dividends, are all what we call temporary or nominal accounts. So without further ado, let's begin to close out these accounts. Well, the first one we're going to close is the revenue account, and I'm going to pop up here so you can see revenue, and you'll notice that it's $187,100, or $187,100 I should say, on the credit side of laundry revenue. Well, there aren't any other revenue accounts. If there were, we'd have to close them as well, but it's the only one that currently exists on our 3.27 problem, so we have to close it out. And what we're going to do is we're going to close it out by doing the opposite of its balance, and its current balance is $187,100 credit, so in order to close it out we have to debit something for $187,100, and that something will be laundry revenue, because remember, we add likes, subtract unlikes. So if I have a credit in an account of $187,100, in order to get it to go to zero, I have to debit the account for $187,100. So I'm going to come over here and I'm going to put in a debit of $187,100, and that closes the revenue account, the laundry revenue account. Now, there has to be an offsetting credit for exactly the same amount, and that offsetting credit is going to an account that we call income summary. An income summary is a temporary account, and it's only designed really to keep the retained earnings section from getting too bogged down with lots and lots of entries. So if I can close all of my revenue and all of my expenses to a single account, then I only have to make a single entry into the retained earnings in order to reflect all of those closing entries. So that takes care of entry number 1, to close the laundry revenue. And you'll notice I've set up here 2 T accounts. Of course, there are more accounts that are being affected here, but I only want to show you these 2. And you can see that I have a credit now going to the income summary account, which is from here to here. Okay, the next thing I have to do is I have to close out all of these expense accounts up here, starting with wages expense and ending with miscellaneous expense. And what I've done is I've written a lot of formulas so that I don't have to take the time to type in all of this stuff. But essentially what you would do is you would come over here and you would add up all of these numbers in the various expense accounts, and that would become your net debit. And again, we're going to use the account, the temporary nominal account called income summary. And when we debit this account, we're going to debit for the sum total of all of these expense accounts here. And when I do that, I'll come up with a $117,125 debit to the income summary account and credits to each one of these expense accounts. Well, remember, they're sitting here now as debits. So if wages expense, for example, is sitting there with a $50,200 debit. So if I credit it for $50,200, since we add likes and subtract unlikes, debits and credits are unlikes, $50,200 debit, $50,200 credit equals 0. Okay? So when I do that, then I come up, after I've done it to each one of those accounts, each one of these goes to 0, and income summary takes their place as a net debit of $117,125, and that's reflected over here into this entry to close the expense accounts. Now, the next thing that I'm going to need to do is close the income summary account itself. And how would I do that? Well, since I need a net debit here to close the account, then my debit's going to be to income summary. In this case, for $69,975. And I need a credit, and the credit is going to be to retained earnings, because income summary goes away. It's a temporary account. However, retained earnings is a permanent account, and it will stay, and now it's taking the difference between the expenses and the revenues, in this case $69,975, and it's going to put it into, that is, make the retained earnings increase by $69,975. That reflects the fact that we have a profit. How do we know we have a profit? Well, that's your revenue. Here are your expenses. Since your revenue is larger than your expense, then we must have had a profit. So if we had a profit, it would make retained earnings go up. So now I have the beginning balance in retained earnings of $75,300 plus the profit of $69,975, and this takes us through the end of entry number 3. We still have one final entry to do, and that is to eliminate the temporary or nominal account dividends. Now, dividends has a normal debit balance, and it's right up here, and you can see that it's actually on the balance sheet side. These are all income statement items, okay? This is a balance sheet item, and so it's over here as $28,875 on the debit side of the balance sheet. In order for me to make it go away, I have to credit it. And what's my debit going to be? Well, it's going to be good old retained earnings, because first, I could not put it to income summary because it's not an income item. That's number one. Number two, we've already closed out income summary, so we certainly wouldn't need to put it there. So retained earnings is the only logical place left for it to go. And when we do that, the $28,775 pops over here on the debit side of the retained earnings account, and I don't know if you can see this or not. I've got it superscripted, but it comes down to $116,500. Notice that the income summary over here has a balance of 0. This $116,500, remember I told you at the beginning of the lecture that to keep an eye on that $116,500, because that will be the number that will pop over here to the retained earnings side after all adjustments, after all closing entries, and after the elimination of dividends, which is also a closing entry, but I kind of treat it separately because it doesn't go through the income summary. And that wraps up 3.27. If you have any questions, as always, feel free to give me a call, and I'll be glad to answer anything that you have. And again, that wraps up everything on 327 through adjustments, through moving over to the financial statement, to finally the post-closing trial balance and the entries themselves that make all of this happen. So thank you for your attention, and good luck on the exam. Let me know if I can help you in any way.